Another potentially rocky day for Wall Street is taking shape on renewed coronavirus fears. Right now, the Dow Jones Industrial Average is indicated for a lower open to the tune of 187 points. S&P 500 off by more than 21, then NASDAQ down by almost 78 points. For more on the trading day ahead, I am joined by Phillip Streible. He's Chief Market Strategist at Blue Line Futures. Phillip, thank you so much for joining us here today. So here we are again. It looks like we're a bit concerned about the coronavirus. We were concerned some time ago. I know on a particular Friday several weeks ago, we saw a very sharp sell-off. Things then turned around. We kept notching these record gains, including yesterday. Now we're worried again on some of these new numbers. What do you think? One of our earlier guests, Rob Morgan, says this is just an excuse to take some money off the table.
Well, I think that investors are definitely going to get caught off guard here, going to bed with record highs last night and then this sharp reaction lower, that primary focus being the coronavirus and the longer-term ramifications it has on the global economy. So I think investors are going to step back, look, see what their exposure to China is. You know, you look at commodities across the board, the best three performing commodities out there year to date. Palladium, they've got a ton of exposure here with Chinese automakers. So you might see palladium prices take a step back from being that, you know, champion there as the best performing commodity. Sugar and cocoa, those have real supply threats out there. Now, the commodities that are probably going to get hammered the most have the most exposure to China. Coffee, the worst performing commodity, down over 20%. You've also got soybeans. Remember, China, we've got the phase one trade agreement deal already in place, but they're not going to be able to live up to those expectations. So we should see any of those commodities really come off the board here. So, you know, the other two that I'm looking at, copper, they're probably going to see that prices slide there, and then all your energies across the board. So we are going to have a sector rotation. The big deal is, though, as far as the downside on the U.S. equities, remember, I think equities have been, you know, a shining star here for President Trump in his reelection. He keeps, you know, touting that U.S. equities are doing so well. Everyone's 401k is doing fantastic. So I think that there's limited downside on U.S. equities. The Fed will probably step in if things really get out of hand, just like we already saw the People's Bank of China already step in, provide that liquidity.
Well, I understand you think there's limited downside, but you also think that we could be in for about a 3% sell-off here before the end of the quarter.
Yeah, if you look at the rise that we've had on, you know, the S&P 500, I mean, it's been just such a dramatic move higher. So just 3%, 150, 200 points off the S&P 500 really isn't that much. I mean, that would be healthy and a great correction for all these markets. There's too much money also sitting on the sidelines that's been waiting to come in. That's why I wouldn't be shocked one bit at all if by the end of the trading day, somehow miraculously we come out and make new contract highs. You know, so people have been waiting to buy these pullbacks here. I do think, though, you do have to rotate out, get a little bit of safety. I mean, it's no coincidence, too, that gold and silver are pushing up. I think gold futures should push back through that 1,600, ultimately end up at 1,650. It's ironic that gold is rising with the U.S. dollar index, but people are rotating quietly under the table, you know, into some safety and out of risk assets.
Very interesting stuff here, Phillip. We will see what the market day has ahead. As we mentioned, the futures are indicating a lower open. Thank you for helping us sort of square it all up, Phillip Streible. So let's take a look at futures here for you.